Okay, so we are looking at boom 500. This kindly boom 500, and with just like other markets are, we could look at them from with the same principles actually. So what I want to educate today is about the broker's mentality, how the broker makes sure he's moving the market according to his preference. Because when you are trading, you actually trade like an ordinary trader, but the broker trades from a different perspective. So at the end of the day, you might think that, okay, this is a resistance or this is support, let me go in for a trade, and then the broker tricks you. So what time frame is the broker trading on? What time frame is he looking at? And what time frame are you looking at? Because mostly you would like to look at a 1 minute time frame. You like to go on the 1 minute time frame because you are looking at a smaller picture and then try to say that, okay, based on an upward movement, let me just go for a sell. So we are probably going to place a sell here, and then by the time you realize you have more spikes to the top, and then you blow your account, right? So the little maybe $100 you put in, it gets destroyed by a spike. Okay, so what is the broker trying to do that you don't seem to understand? First of all, let me take away my first of all, we would like to look at the broker's favorite time frame. What's his favorite time frame? It is W1. Okay, because the broker has to account for the yearly. He has to account for the yearly. How do you call it? Accounts. Okay, he has to account for the year. So he usually likes to trade in weeks. So you'd see that the price or price pattern is moving in a certain direction throughout the entire week. And you know that the subdivisions of a week are days. So we like to look at them in days and weeks. So we would switch to W1 and then check out the entire chart from the broker's perspective. When I take my crosshair, which is this tool, we can move back and see that this is 2019. So from 2019 to current 2022, we've actually had a downtrend on Boom 500. So first of all, we need to know what is the trend for Boom 500. The trend for Boom 500 is actually a downtrend. That's all it is. That's all Boom 500 is trending downwards. So first of all, before you even pick a trade on M1, to make sure you are picking safe trades, you need to be sure that the entire trend of the market is downward. So remember, number one rule is that the favorite time frame for the broker is the weekly time frame. I'm going to show you something shortly. Let's look at the step index. Okay, I'll lower my indicator a little bit so I can make room for the chart. Right. It takes some time to load. If you check step index, you realize that we also have a downward trend on the weekly time frame. Like I said, the weekly time frame is the broker's favorite time frame. I hope all can hear me. If you can't hear me or have an issue, kindly text it in the chat or raise your hand. Right. So we would have to know the trend because the trend is your friend. I think that we know that statement, but we haven't really applied it in our trading. The trend is your friend. So first of all, know the trend. And the broker's favorite time frame is W1. Whereas you and I, our favorite time frame is M1. So we always see a smaller picture. This is step index. I wish it could load faster. This from 2019. Okay, I think it started from here. All right. So from 2019 up until 2022, we could take our equidistant channel. Let me clear this, which is this, and then draw from here. Now you are connecting 2 points. Remember, I taught you in price action. You need to connect 2 points. So point 1, 2, 3. Once you match point 1 and 3, which is this and this, you have an automatic parallel line, which is the point 2, stretching out into the future. Okay, so Based on this, we can say that the general trend of step index, according to the broker, is that he will be selling most of the time. So you realize that if you've been buying on step index, most of your buys will be losses because you are looking at M1, M5, M15, but the broker is looking at W1 and making sure that he's moving from here after the bounce of here. I would name this point A. I'll change the color to black. I'll change this to black. After point A, point B, then point C, the broker starts to sell. How do we know the market is going to sell from here? Because from this point, when he hits B and hits C, when he started to retrace here, it was a clear sign that he was targeting this area. Okay? And that is why anyone who knows where the weekly time frame is moving knows that he should be going for sells instead of buys on step index. But if you go for a buy and you miss out, you are in danger because the broker will be selling on W1. I'm going to show you another thing on the boom market, boom 1000. You realize that boom 1000 was buying for a very long time. For those of us who noticed, this is because the broker saw a break in channel, or he intentionally patterned a break in the channel to buy on the weekly time frame. This is the weekly time frame for boom 1000, and you're going to see this. Let me clear some of the things I did here. All right, so please prepare your questions in the course of the teaching. Now, this is what happened on boom 1000. This is weekly time frame. Remember, the broker's favorite time frame. So from this point to this point, 1, 2, 3, a parallel channel should bring us here. Okay, so the broker is moving from here, point A, to point B, this side, down to point C, and then you see that point C area creates another channel. Point C creates another channel. I'll change this color to red. Good. See what's happening here. This is W1. Remember, when this channel got broken, some of you remember that there was a lot of spikes on the bull market. Now, if you were watching W1, which most of us don't, 99% of us don't, you realize that when this channel was broken on W1, the coming weeks was going to be buys throughout. And so most of you were making losses because you were selling on 1000 when this channel was broken and was heading for the top. And then guess what? After it retraced, after the long series of buys, when it retraced, guess what? It came to hit the channel, the resistance, which has now become a support. So once it hits this week 1, week 2, there was a turning point again for another buy. So remember that the broker is trading in weeks, but you are trading in minutes. So who is at an advantage and who is at a disadvantage? Either the broker will always be at an advantage because he's looking at the broader picture. He's looking at the weekly time frame, but you are trading on M1, M5, M15. This also means that your trade should be very, very strategic. And it shouldn't be just because you saw a spot that presented itself as a potential spike. So you went in for a trade. You have to analyze. And that is why sometimes when you're caught by a spike, you feel the market's going to turn in your favor anytime soon. And guess what? You have like 6 spikes and you are already in minus 60 and you blow your account. But if you're always considering where the broker is moving to on a weekly basis, you'll be able to have a fair idea of where the market is going. Now, to make it clearer, this is candlesticks. You could switch to lines, okay? We'll switch to lines. And let me change properties. I'll change this color to this. All right. This way, you are not distracted by the wicks when you're using the line chart. Okay, so you're able to easily see that a channel has been broken or is bouncing off. Okay, so from here, it's easy to see that it's bounced off, or it's actually broken this minor channel within the major channel. Okay, those are supposed to be your entry points. Now, so how do we enter a trade? Do you see what happened? This is what I was predicting on Boom 500 when I went in for the sell trade, because I knew it's going to spike. So I went in for a sell to show you from the beginning that if you enter a trade on 1 minute, just because you feel it's a spiking or a selling opportunity, you're going to be caught by a spike. That's just what happened. You see that? So there's always supposed to be a strategy, place, or point at which you are selling. Okay, so let me just go back to 1000 on the weekly. All right, we have 16 minutes more to wrap up. Good. So after I know the weekly direction of where the broker is going, what I'm supposed to do is I'm supposed to go in on a lower time frame, the next low time frame, which is the daily. Then I have to check. Now let me show you the previous trades I took yesterday. Okay, the trade history. They were all profits. They were all, none closed in a loss because of what I'm teaching you. Okay, but it requires patience and calculation. So if we lower down, you'd see that we're on the daily time frame, and then I'll switch to candlesticks at this point. We see on the daily time frame that we have a support zone here. I'd like to get my triangle to. Okay, let me just use this. I think this is. Let's find objects. The rectangle too. Right, this area is a support zone. Okay, this area is a support zone. So first of all, take note of the support zone that you're in. This is a support zone. So once price moves from here, from the top of that channel, and comes down here, you'd have to relax. You'd have to wait for the market to retrace. There are certain factors that come into play. They come as complementary tools. What you want to do is look at the trend and wait for when the trend is broken and when certain retracement levels are made. Now, you see my Boom 500 is even in a further loss, all right? Just like what I said. So you'd have to look for a downward trend, okay? Make sure that this downward trend is broken by the candles. Then you'd also have to look for Fibonacci retracements, which I would find here, Fibonacci retracements, and I'll trace from the top to the bottom. I'll change this color. And this is why MT5 gives you all these tools, so that they can help you to make better trading decisions. I'll change, I'm going to change the other color. This is it. I'll change this to black. So when I see the downward trend, I can place my line here and I'll place my Fibonacci. At the moment it breaks the line, I have to look for my Fibonacci. Get the trend, wait for the trend to be broken, get your Fibonacci, and make sure it's retracing to a certain level in between 23.6, and 61.8. You need to make sure the market is retracing within 23.6 and 61.8, which means that the market should be retracing within this area. Okay, within this area. I'll use my rectangle here. Make sure the market is retracing within this area. Usually, the market will never retrace 100%. In most cases, 97% of the time, you will not have 100% retracement. So when the channel is broken and it retraces in between 23.6 and 61.8, there is a possible reversal. Now we are on the daily time frame, okay? So we could even do this on H1 or H4. But but I'm just trying to analyze downward. So we are starting from W1, which is the broker's favorite time frame. Then we go to D1, analyze, go to H1 and analyze. So on D1, we see that there's a downward trend and there's a retracement within 23.6 and 61.8. Within this zone, we can go for a sell, because there will be a possible retracement into the first wave or the strongest wave. I hope that makes sense. So we have a strong wave coming down, and then we have the market retracing into this retracement zones. And then at those points or within this zone, we should expect a sell again to continue the initial trend that started. Right, hope makes sense. I'll come out, and then you see that anyone going for a sell after this trend was broken, right, and waited for the candles to move within 23.6 and 51.8, anyone who goes for a sell there will not miss profit. So if I zoom in again, you realize that after this break, once the price moves into 23.6 zone, if you go for a sell, you'll meet your TP. If you wait for it, goes up again into that zone, go for a sell, you meet your TP. And all this while, this area is still serving as support for the initial channel you drew. So this video is on record, so no problem. You can always go back and watch over and over. So we're on the daily time frame and analyzing that way. Okay. We are using our channels, we are using our trend breaks, we are using Fibonacci retracements, because the market will always retrace. There will never be 100% movement forever. Then we could also look at this. At this point, where's my Fibonacci object? Fibonacci retracement. From the bottom part, okay, let me clear everything first of all. From the bottom part of this area, all right, where we had this, okay. Now at this point where it broke and started buying, you could wait for the market to turn, because you don't always have to rush to take trades. Sometimes you just have to wait to get the right judgment of the market. So once it turns here, what you can do is you'd have to look for a Fibonacci, insert the object Fibonacci retracement, and connect it from the lowest point into the past, that is, you are picking from past data, and connect it to the highest point. Now at this point in time, price is somewhere here. You have seen quite a retracement, so price is here. Then you can pick your rectangle tool, your object, your shapes, your rectangle, and then look for a 23 to 61 zone for retracement. What happens? You see that if it's selling, it's going to sell within that zone. You realize that price is going to sell and move within the 23.6 and 61.8 zone. So that is your analysis for the daily time frame. Then you could move down into the weekly time frame and check what is happening. Sorry, the H4 time frame, and check what is happening on H4. Okay, let me turn this off. On H4, you see that after this long trend, after the break here, and the market starts to retrace, it creates a new channel here. So I'll take my equidistant and create a new channel at this side. Then I'll wait for price to move outside of this channel. If price moves outside of this channel through the top, which is the resistance, it means that it will be heading towards this point. That means that I can place my trade here. If a channel is broken, I can place my trade here, and then I can place my TP right under it, because when you place it exactly on it, you might miss it. So I can place my trade here and place my TP here, and then I place my SL back within the channel. This is on H4, okay? Then I could move to H1. What is happening on H1? I'll move to the place I do the stuff. Okay, so I'm on H1. It gives me almost the same thing. So I just have to wait. Now, this is what is happening. at this point is a place where the broker is still indecisive. And I taught this in my other video, the one on the website, the one I spoke about the broker strategies and tricks. He's doing this to pack a lot of people within this zone, this consolidation zone. And then when he sees that a lot of people have gone for a sell, then he buys. So he needs to move price within a certain consolidation zone until he has known the number of people placing a sell within that zone, the number of people who have placed a buy within that zone. If you have all gone for sells, he realizes that your lot sizes accumulatively gives him more money if he buys. So at that point in time, he's going to buy. But at this point in time, a lot of people will probably go for a buy again because they feel that after the retracement, the trend is also going to continue. So guess what? People place in buys and then he sells. He breaks the channel and sells. Okay, he breaks the channel and sells. There's a channel. He breaks the channel and he sells here. Then people are like, oh no, the market is going to start selling. Let me start selling because we've had a long trend of buys. And then guess what? He buys again. So he's using channel breaks, he's using trends, and he's capitalizing on your psychology to pick trades against you. Okay, so all this while we are talking about W1 being the broker's favorite time frame, and then measuring it down to lower time frames where we can pick our trade. Okay, so right now with market analysis, you can see that based on W1, the boom market is heading towards another resistance at the top, which is around 14,600. Price around 14,600. That's what is about to happen based on W1. Then we have to lower to D1 to see what's happening. Then we lower to other time frames to see what is happening. H4, H1, M15, until we come to the very last one, which is M1, before we pick a trade. So you don't just enter the market and say, there's been a spike, let me start selling. Because when you start selling here, on the weekly, he's going to the top. And he might not be back anytime soon because he measures in weeks. All right, so this is just the little piece I'm going to share today. We'll be continuing another session, probably on Wednesday. So the floor is open for questions. You have just 5 minutes to wrap up. I see 12 people participating. You are all welcome. And if you have any questions, you have 5 minutes, so I answer them. Thank you.
Hello. Hello.
Yes, can you hear me?
Yes, thank you very much for the explanation.
Oh, you're welcome.
Yeah, I have a question. Does the Fibonacci replacement work the same way as the key-gen BTA?
Does it work the same way as
the key-gen BTA indicator?
Where is that one? Where is it under?
It's like the belly system.
What's the name of the indicator? Is it under trend or oscillated? Because I don't think I've used what you are talking about.
But the belly system, you've used it, right?
I don't think I've used that.
Okay. But they work on the same line, and what you just explained about boom 1000 is giving the same confirmation on the 3 time frame that the resistance is on 14,600.
Yeah.
I wanted to know if they are similar because I have to buy an key-gen BTA indicator.
Oh, okay. So
yeah.
it's a custom indicator.
Yeah.
Okay. It's not inbuilt with MT5. Okay, I'm sure that's why I don't know.
Yeah.
Okay. So I think I don't really know how that works, but then
it works on the support resistance.
Oh, okay.
So, yeah, and it has this buy entry and sell entry.
Okay.
Hello? And
yeah, Shahab, I can hear you. Okay.
Hello, sir.
Yeah, please hold on. I think Joanne is about to wrap up.
No, I'm okay. I just wanted to know if they are the same, because after your explanation, it looks like it's the same thing.
Oh,
and I think it's a modified version of the ownership.
Oh, okay.
Yeah.
That's fine. I even have another one that also tells the support and resistance. Maybe later on I'll show it. Yeah, Shahab, can we hear you? We have just 2 minutes more.
Hello, sir.
Yes.
Sir, actually, we are placing trade and boom with the base of support and resistance. Okay, sir. So can we trade based on divergence and boom or crash?
Okay. Boom, is it boom 500 or boom 1000?
Boom 1000.
All right. So we have it here, and we need to know if we are talking divergence. We need to know when the RSI. I'm using RSI for example. You can use stochastic. You can use MACD. I'm just using RSI at period 40 for what he's talking about. Right. So first of all, you need to find, divergences are better on higher time frames. Okay, higher time frames are better. So let me clear everything from the screen, and then we can check it here. So we have to look for divergence, and the way you do that is you need to find, or you need to see that price is making a new low, and yet RSI is higher. The new low on the price chart should be the opposite of what's on the indicator. So we'd have to check okay, so we could say this is quite a divergence from here. I'm on H1. Let me place my vertical line just so I don't miss it. Okay, so we could say that this is quite a divergence because from here we have RSI. Now this is a low. This is a low price. Then we have, sorry, let me clear this. All right, we have a price here, okay. We have price here, and then we have it slightly making a new low here. But then on our RSI, we have price, the RSI at this point, and making a higher point here on the RSI, even though there's a slightly new low on the price environment. We have RSI being higher at this point than this. So at this point in time, we can say that the market should be buying after this. It should be buying after this area because there's a divergence on the RSI and then the price. Then we could also say that from here to there, we have price moving lower. So from here to there, price moved lower. But on RSI moved higher. So this is a divergence. And right after you see bull candles here is a buy. But the only challenge is, how do you know, or how long is the divergence going to last you in profit? Okay, that's the only problem. How do you know when to tip? That's the only problem. So with this, you could do something like this. You could take an equidistant tool and then measure from here to there. Put your channel here. Right after this, right after the divergence here, when you see the bull candles and you enter a buy, you can place your TP right at the top, where it's within the channel. Because there's a possibility that when it hits the resistance of the channel, it's going to come back. So once you spot the divergence, you can trade within the channel by setting a TP inside the channel, but right under the resistance of the channel. I hope it makes sense. All right, final question.
Dear sir?
Yeah, I'm here.
Sir, would you like to analyze the C1, sir?
All right. Okay. Let me see the trades I took on C1. I went for a sell, which was $13.50. All right. Okay, so why did I go for a sell? All right, let's check this out. I think I can delete this. So I'll check W1 first. Like I said, broker's favorite time frame, W1. I need to know what's happening here. Taking some time to look. Okay. 2019 to 2022. Okay, good. So basically, we've been trending downwards on crash 1000. Okay, so I know that based on the broker's favorite time frame, it's a downtrend, solely a downtrend. Then I'll go to D1. I have to have a better picture of what's happening here. Good. Then I spot another downward trend here. And I move down to H4 to see what's happening. I'll take the time I took the trade, which was around 2:05 in the morning. Okay, so I'll use my crosshair to look for the time, 2:05 in the morning. It was somewhere here. Okay, so I'll now go in. I'll go for H1 and then check what's happening. We have a break here, okay? And then we have a channel here as well. Channel here that has been broken, right? So the market heads to the top. And I look at M15. Then I go in for this. Now remember why I took the trade. There's another channel here. M5 says this. Now I'll look for the time I took the trade. I'm going to give you an answer to your question. I'm trying to come from the past. This is where I took the trade. This is why I took the trade. I took the trade here. I went for a sell and the TP was here because I saw that with this channel, price was above half of the channel. Price was here. Price was here. Then I set my TP not on this line, but somewhere close in between this area. So sell here, take profit here. Why? Because I've seen that we are within a channel of M5. And if price is moving this way and moving that way, we are sort of in a range. It's like trading range break. All right, so I was expecting, based on the fact that we're at this channel, that price is going to go down to hit the support area before it will, if it's going to go up, will break this resistance. So based on this, we can say that now price has left the channel. Price has left this channel. So when I took a trade here, SL was supposed to be here at the top outside the channel, and TP is supposed to be inside the channel. Because when your TP is outside the channel, you are just guessing or gambling. Because you don't know whether it's going to break inside, it's going to break outside towards where your profit is or not. Okay, so make sure you put your TP within the channel because that's where you're trading. But then your SL is outside the channel because when the channel is broken, there is a possibility that it's going to go further. So now this is broken. This channel is broken, but we cannot just buy here. We still have to wait. We cannot buy here because it is possible that the market can retest this line and possibly break into it before turning again. So we won't just buy because, and also we have a long trend of buy here. So buying at this point might be too late. So you have to see corrections of sells, which means that if this thing is going to buy, it's going to still come to retest this resistance as a new support and then buy towards the top. So if you go on a higher time frame, maybe even D1, you realize that we have more room for the market to move up. But we can't be too sure if we are trading on M1. We have to wait for the market to retest. So as large as this chart is, we are only trading here, this small area. All right, so that's just about it. Let's talk about, if you have any questions, let me know on Telegram. Our time is up, and I'll share this on YouTube so that you can rewatch if you have the time. Thank you, Shahab. Says outstanding. All right, so thank you for joining, and I'll see you later.